So AI, let's talk about a couple of corporate examples and financial ones for this audience. So AI can predict commodity prices. This is from the work we had done at Gramener. There's a leading agricultural enterprise which was trading in commodities like palm oil, viscose. They had physical stock, and they were producing some of it, and they were selling it and trading in it. So they wanted accurate price forecasts. So we used machine learning approaches, started with simplest traditional forecasting models and went up to the more advanced neural networks based techniques. And this is what the solution did. So you have the historical prices here, and in a given week, they used to trade once a week only. So in a given week, there was a prediction of what the price is likely to be for that week. And based on that, the system recommends if you should hold or sell, if yes, for how long. So here it says that there's a minus 0.5% change. There's a slight dip expected. So now they're trying to sell the stock. So it says the price is expected to increase only after 2 weeks. So the recommendation is hold and sell after 3 weeks. So this is how a business decision can be made by using AI. And this was almost 90% accurate. And there was a benefit of almost 3.2% uplift in revenue thanks to the system. And they trade in a couple of billions of dollars. So that way, this was a huge improvement for them. Okay. So the next one is if AI can predict the prices, it can also recommend stocks. Robo analysts are being compared with human analysts. Anyone here is investing based on robo analyst recommendations? You can probably say yes, or in case you use which company do you follow? Anyone follows robo analyst recommendations?
Yeah, we hear about that. I've never tried it, but it's a bit risky, right? You don't know how that's going to turn out. That's the whole thing, actually.
Right. Yeah. So there's a lot of interest in this space, but given the financial impact, people have been cautious. There was a recent study which was done by Indiana University. They took up 76,000 research reports, reports from human analysts and robo analysts. And they studied what is the pattern of recommendations. How often do they revise it? What is the proportion of buy, sell, hold, and which performance was better overall? Which portfolio built using the recommendations? Which of these was better? So interestingly, they found that the robo analysts had a more balanced set of recommendations between buy, hold, and sell. Humans had a lot more buy recommendations than sell. There's very few sell recommendations compared to the robots. And also they saw that the bots were less emotionally influenced based on some recent news or some events. So it didn't change that rapidly. But on the other hand, it was looking at the company filings, the annual reports and regular disclosures, and it revised the reports a lot more compared to human analysts. So that way, a balanced distribution and revising the reports. And as a result, overall, when they looked at the portfolios, the robo analysts outperformed their human counterparts. And so they're saying this is the trend. When people develop that trust and confidence in these recommendations, probably then it will happen, the adoption will happen very rapidly. So if AI can predict prices and recommend stocks, it can work on the other side of the stock exchange as well, right? So Nasdaq has implemented an AI-driven system for fraud detection. So deep learning is the technology used there. So it is working hand in hand with human analysts. This went live last year. And the earlier system they used for fraud detection showed about 1,000 alerts every single day. And the human analysts used to go and check and validate all of those. So now with this, they're expecting that since AI is a much better patterns spotting machine, it will be able to detect more complex forms of fraudulent trading, and including spoofing and other fraud patterns. So it also it's not a either or. It works hand in hand with humans, like I mentioned earlier. With humans in the loop is an important concept where AI, whenever it combines forces with humans, it can continue to learn and refine its understanding. So in this case, when a recommendation is given that probably this might be a fraudulent activity, humans check it, and then they give the outcome back to the machine so that it takes that. In case it was a false alert, it will try to do it better improve on it next time.